continue with leases where we stopped yesterday. If you're able to hear my voice and if you're able to see the screen, just if you can give a thumbs up or yes in the comment section so that I understand that my audio and video, both of these as well as the screen, is visible to you. Good morning, Bhardwaj, Michael, Chaitanya, Nivedita. Good morning, everyone. So I hope all of you have revised, and thanks again for joining in. It takes a lot of commitment to come back every day and at early in the morning to attend the classes. Thanks for that. So we'll wait for a couple of more minutes, let others also join in, and then we will start up. In the meantime, if you have any doubt or if you have any question related to yesterday's session, please feel free to ask. I'll be addressing them, and then we'll start with the class. Another 2 minutes to begin. Okay, all clear, fine. Good morning. So I think we are good to go. Just a quick recap of what we did yesterday. So yesterday we understood about leases, what is the meaning of lease, and then how do we identify whether there is a lease or not. And today is the most important part, which we'll be talking about the lessee accounting. Right? Yesterday in yesterday's session we also spoke about how do we broadly calculate a right of use asset and a right of and a lease liability. Okay, so let me just add that screen also. So yesterday we understood how do we calculate right of use asset using this particular example, and also to calculate lease liability. And before we move ahead, just a quick recap. Right of use asset will always be equal to the lease liability, that is the present value of lease payments, and we will discount it at the rate implicit in the lease, which we also call as IRR, or the incremental borrowing cost if the implicit rate is not known. So it depends on whether the rate is known or not known. If both the rates are given, then you will use the discount rate which is implicit in the lease. Then any lease payment that is made before the commencement, that will add. If there is any lease incentive received, that will reduce. Initial direct cost will add, and present value of estimated dismantling cost, that what we do in case of in AS 16, the same logic or whatever you have learned in AS 10, same logic will apply, and we will add that to the ROU asset. Now Once we have determined that yes, we have a right of use asset and a lease liability, how do we initially recognize it? Now, whenever we say recognize means passing a journal entry in the books of accounts. So we are talking about recognizing a lease transaction in the books of lessee. So initially, when the lessee enters into a transaction, the first entry that he will pass is ROU asset debit. ROU asset is nothing but right of use asset. Now, why are we recognizing a right of use asset? That is the right we are reflecting in the book, saying that yes, we have a right to use a particular asset for some period of time. Now, why are we doing it? Why are we showing it in the balance sheet and all of that? That discussion we have in the regular classes. Here, please understand, we will recognize a right of use asset, which is nothing but the amount that we have calculated here, 476,758. I think it is not visible, just a second. So ROU asset is 476,758. So I'll just link it with this here. We'll debit that, and you will credit to lease liability. Now, lease liability we have determined as 466,758. 466,758. And the IDC that we have calculated, initial direct cost, we would have paid by bank or by cash. So we can say to bank or cash 10,000. So our journal entry is done. So this is on day 0, the entry that you would pass, recognizing a right of use asset, lease liability, and crediting bank. If at all you have made some advance payments or if you have made some initial direct cost, this is what you will pass. Then subsequently at the end of each year, what you would do is you would pass an entry recognizing the interest expense and also accounting for the lease liability payment that is done, right? So first entry to recognize the interest expense. Now, interest expense, if you see, we have calculated here for every year. So whenever you have a lease related question, this table is very, very important. If you prepare this table, after that, it is not at all difficult to pass the journal entry. Now, as per this, our expense is 42,008, right? So at the end of first year, you would say year 1, interest expense debit 42,008 to lease liability 42,008. Okay, so that is the first entry. Then when you make the payment, you would say lease liability debit to bank 120, 123, 120, 123. Like this, year on year, when you pass the journal entries, at the end of the lease term, that is at the end of the 5th year, the lease liability balance would be 0. So here you have calculated opening balance, add interest, less payment, you will get the closing balance. At the end of the 5th year, the balance would be 0. This is the basic way or basic concept that you need to understand as to how do we pass the journal entries for lease accounting. Okay, then when we calculate lease liability, we said we need present value of lease payment. So now we need to understand what is lease payments, and here is one point where students get a lot of doubt. Okay, what is to be included, what is not to be included, how do we understand what are the amounts which should be taken into calculation to calculate the lease payment. Now, whenever we say lease payment, one thing that is very simple and straightforward is the fixed lease payment. That is, I will pay 10,000 rupees per year as rent. I will pay 50,000 rupees per month as rent. Whatever is the fixed amount given, and this will be given to you in the question, that will be included in the lease payment. Now, sir, who has to make this lease payment? We are talking from the point of view of the lessee. So, lessee will make these lease payments. So, fixed lease payments given in the contract will be included. Then, there is something called in substance fixed payment. Now, what is this in substance fixed payment? In substance fixed payment, when we say, let me give you a very simple example. Say, this kind of arrangements, you can see the variable payments. You can see, let us say, when there is a shop in a mall which is being rented out. So you wanted to open a shop in a mall. You didn't want to pay fixed amount or fixed monthly rental or fixed high fixed monthly rental. So what the mall owner has agreed is fixed payment is 50,000 per year. I am using per year on purpose because in examination most of the questions will be on yearly basis, right? So fixed payments per year is 50,000, and there is a variable payment which is, let us say, 5% on sales. So the mall owner said whatever sales you make, out of that 5% you pay us. Now, is this 5% determined? Can I say today what will be this 5% payment every year? I will not be able to say, because the variable payment depend on sales. Sales are futuristic, right? So if there is a variable payment like this is not included. This is not included. But sometimes what happens is there is a condition or there is a contract clause which says variable payment of 5% on sales subject to minimum of 5,000. What does this mean? Whether or not I make any sales, 5,000 has to be paid to the owner. Whether or not I make any sales, 5,000 has to be paid to the owner. But let us say in a month or in a year, sales are 2 lakhs. If sales are 2 lakhs, I need to pay 2 lakhs into 5%, 10,000. If the sales are 50,000, I need to pay 2,500, but the clause says minimum 5,000 you need to pay. So I'll pay 5,000 here, I will pay 10,000 here. So the commitment from the lessee is that at minimum they will pay, or he or she will pay 5,000 of lease payment as variable payment. So standard rule, variable payment is not included. But something like this, a fixed commitment where you have to mandatorily pay this 5,000. You have to mandatorily pay this 5,000. That is called in substance fixed payment, and in substance fixed payments are included in the lease payments. If it is only variable, that is not included. But if it is in substance fixed payment, it is included. If you have any confusion here, please let me know so that I can clarify that. Otherwise, we can continue ahead. So the second aspect is in substance fixed payment, that is to be included. Then, if at all there are any lease incentives we discussed about in the previous class, that will be excluded. Okay. Then I'll come to this variable payments on index or rate, that I'll come to it separately. Then residual value guaranteed by the lessee. Now here we need some more discussion as to what is this residual value guaranteed. Right. A lot of time what happens is, like if we continue our yesterday's example where the subject matter is car which is taken on lease. Car is taken on lease for 5 years period. At the end of 5 years, here we took an example saying that at the end of 5 years, so we removed that amount. Yeah, here we go. 150,000 is the estimated residual value. So at the end of 5 years, the residual value estimate is 50,000. Now this is an estimate which is made by the lessor. He says, okay, after 5 years, when I get back the car from the lessee, I will get 50,000. Right now, sometimes what happens is, as a part of the contract, the lessee gives some guarantee to the lessor saying that we call it guaranteed residual value. You can note it down also, guaranteed residual value. Now, what is this guaranteed residual value? The lessee tells the lessor that, see, 25,000 or 30,000 for example, I guarantee. Now, what is the meaning of this guarantee? The meaning of this guarantee is that if the lessor does not find any other buyer, lessee will pay 30,000 and either take over the asset, or lessee will find a buyer will take over the asset at 30,000. But lessee is taking that commitment. It is my responsibility that I will pay you 30,000. The lessor says, okay, but if I get a higher amount, if somebody pays me 50,000, 40,000, that I will enter into a transaction with that person. Okay. So the lessee here is committing that I will pay 30,000. So that is a minimum commitment that the lessee is taking, and we will include that as a part of lease payment because lessee is guaranteeing that particular value. Or sometimes what happens is at the end of the contract, even when the assets are not being transferred, they guarantee that okay, when we vacate the premises, when we conclude the premises, we will pay 30,000. We will pay 30,000 at the end of the term. So this residual value guarantee of 30,000 is a part of lease payment, and that has to be included in the lease payment calculation. So we have understood fixed lease payment, in substance fixed lease payments, then lease incentives will reduce, then residual value guaranteed by the lessee, whatever they have guaranteed, that is included. If they have not guaranteed, this is not included. So when we say included, what we mean is when we calculate the present value, we will use that number or will include that number in our calculation of present value. Then exercise price of purchase option if the lessee is likely to exercise the purchase option. Now the meaning of this is, sometimes what also happens is that when you have taken an asset on lease, the contract would say that at the end of the period, okay, at some amount the asset can be purchased by the lessee. Here the lessee is giving a guarantee. Okay, here in the second case the lessee has an option. Option to what? Purchase. Now please remember, whenever we talk about option, okay, so this option, it comes in future and options also. Whenever we talk about option, option gives us a right to purchase. Option gives us a right to purchase or right to sell. Now when I say I have an option to purchase, the other party has an obligation. When I say I have a right to purchase or an option to purchase, the other party has an obligation. Now let us say at the end of 5 years, residual value expected is 50,000. There is an option to purchase at 10,000. Now, will the lessee exercise this option? Something worth 50,000, if I am getting at 10,000, will the lessee exercise that option? Most likely, yes. If the lessee is likely to exercise this option, means the lessee is telling itself that, see, something worth 50,000 I am getting at 10,000, let me buy it. When will I buy it? After 5 years. So the standard says that amount also you should include in the lease calculation. Okay, so whenever it's a lease payment, that is also included. Now, one standard rule that you have to keep in mind is variable payment are not included. Variable payment are not included. If it is a in substance fixed payment, something like a minimum commitment, that is included. But variable payment on production, sales, etc., that is not included. Right. So far, if you have any doubt, I'll take a pause here and I'll address your doubt before I move ahead, because the next discussion is very, very important, where a lot of students get confused. So if you have understood, please put in the comment box saying yes sir, understood everything. If not, please ask your question. I'll address them before I move ahead. Because unless you are following the lectures, there is no point in me continuing to speak from this end. Okay, so there is a question from Saisham. Lease incentives is being subtracted from lease payment, which is indirect, which indirectly figures in the lease liability portion of ROU. In ROU asset calculation, we further subtract again. Isn't it double counting? Okay. Yes, Rajalakshmi, I'll come to the variable rate based payment. That is the next point which we will be discussing. First, addressing the question which where he was saying. So let me just share the screen again. Let me just share the screen again. So it crashed, PDF crashed, so I had to open it again. Okay, now lease payments, there could be cases where lease incentives are received subsequently. Okay, so whenever we are expecting some lease incentive subsequently, or even at the beginning of the contract, that would not be included in the lease payments. So basically, it is a negative number to calculate the lease payments. Once you have included it here in the lease incentives received portion, again you will not deduct it from the lease incentives received. But sometimes what happens is there is a one-time payment. Now, if that is a one-time payment that is not included as a part of lease payment, that part you will reduce it from here. Okay, so you will not do counting at both the places. I hope it is clear. Shouldn't there be a cap on the variable lease payment so that it does not violate the substantial economic benefits to be received by the lessee clause for the contract to qualify as a lease? So the fact that the lessee has to pay, a variable payment does not stop the lessee to get substantially all of the economic benefits. Okay, economic benefits I will generate from the asset, and then I am subsequently paying that or paying a portion of that to the lessor. It depends on contract to contract how much it is. Okay, so if you are getting, let us say I will pay 50% of the economic benefits, that still is okay till the time I am getting all the benefits, and as a payment I am making it to the lessor. Now one more thing what you need to understand is these kind of arrangements, when they are done, they will have a mix, or they will have a balance between fixed and variable payment. What to include: minimum in substance variable amount or total variable amount. You will include minimum in substance variable amount. So in the example we took 5,000, we will include. Excess, any amount paid over and above 5,000 will be taken to P&L, will charge to P&L. Okay, minimum in substance, that is done. Variable payment is estimated accurately, then we can consider as lease payment. No, variable payment is there a commitment to pay. I may make an estimate. How will I make an estimate accurately? If something is an accurate estimate, if something is accurate, we will not call it an estimate. Okay, so what you need to understand is there a minimum amount to be paid? Is there a minimum amount that is committed to pay? Then in that case we'll include it as a part of your lease payment. Okay, right? So here 10,000 and 5,000, that is what will be included, not the other one. Now, the next aspect, that is variable payment, which is linked to a index or a rate. Now, if any variable payment is included or is based upon index or a rate meaning inflation index, LIBOR rate, if the payments are based on these kind of rates, then annual increments are considered. So, if let us say it is linked to LIBOR, then based on LIBOR, you will include that particular increment in the rate. Or if it is based on an index is generally the consumer price index, what we refer to, that is also included. But if it is something which is, this is very important for us to understand, if this is something which is based on performance based, now performance based could be based on sales, based on output, based on production. If it is based on that, then the variable payments would not be included. Okay, so very important, variable payments which are based on index or a rate, that is not included. If variable payments are based, if variable payments are based on LIBOR or index, that is included. If it is based on performance, production and all of that, that is not included. Now, what do I mean by included and not included? For example, let us say LIBOR is 5%. I'll just share the screen. LIBOR is 5%. We have said 10,000 and LIBOR based increment. So 10,000 into 1.05. My lease payment, I will say it is 1,050. Okay. So that is how I will calculate if it is based on an index or a rate, because I already know that particular index, that is particular rate, and based on that I can calculate the future payment. Sir, what if the rate changes in the future? If the rate changes in the future, then the differential part, whatever we have calculated, any extra amount that we pay, that will be considered or that will be taken to P&L. So just to give another context or example, if you look at this particular question, entity L, I hope it is visible. Yeah, it's visible. Entity L enters into a lease for 10 years with a single lease payment payable at the beginning of each year. The initial lease payment is 100,000, 1 lakh. Okay, so and lease payments will increase by the rate of LIBOR each year. At the date of commencement, lease LIBOR is 2%. Now, when LIBOR is 2%, what will we do? We know LIBOR is 2%. Okay, so every year, see, first year we will take 100,000, 1 lakh. Then we'll add 2% to it, 1 lakh, 2,000. Then we'll add 2% to it. Now, in the examination, if at all these kind of questions come, it is very simple. 1,000 into 1.02 is equal to, keep on pressing is equal to on your calculator. So 1 lakh into 1.02 equal to, if you do, you will get all the lease payments. And then use the discount factor. Now, a lot of time there is a confusion, sir, should we use 3 decimals, should we use 2 decimals, 4 decimals? Standard is 3 decimals, unless the question says 4 decimals or 2 decimals. And if it is given in the question, use it as per the question that is given. Most of the cases, 98-99%, myself being an examiner in the past, we award marks even if there is a rounding of difference. Yes, there are some cases where students really get unlucky. We've seen some S7 papers in the previous attempt where marks are not given because of rounding off. That is very unlucky and unfortunate. But otherwise, 98-99% of the time you will get marks even if you have done a rounding off. Okay, so we pray your papers land in the right hand, and even if you are doing a rounding off, you get the marks that you deserve. So here you can see, based on LIBOR, it is increasing, and you will account for the discount and present value of lease payments. Accordingly, you will calculate and you will arrive at the lease payment. Now, subsequently, if the lease payment variable rate changes, the difference part, the extra amount that you're paying, you will take it to the P&L. I hope the lease payment are done. Yes, so if we reduce the lease incentive received from the lease payments, the same amount will not be reduced from ROE asset calculation again, because we have already accounted or reduced the lease liability. So once you have reduced the lease liability, by taking the same amount, we will not be reducing the lease ROU asset. Now, so these two are the critical aspect. One is the lease payment. The second one is right of use asset. How to calculate, right? Lease payment, present value will be lease liability. Lease payment, present value will be lease liability, and the calculation of ROE asset is lease liability plus or minus these all adjustment. Now with this we complete how do we calculate the ROU asset and lease liability, and then subsequent measurement. Now how do we subsequently measure ROU asset? Okay, now ROU asset, if we come back to our example, here we said right of use asset 476,758. Okay. Now this ROU asset 476,758 we will amortize over what period? Now in this case my lease term is 5 years. The useful life is also 5 years. So I will take 5 years and 476 divided by 5. I'll get every year the ROU asset will be amortized like depreciation. It will be amortized. We don't call it depreciation because it is not a tangible asset that we are recognizing. 95,351 is the amortization that is charged every year. So what you will do is debit amortization by 95,351 and you will credit accumulated amortization 95,351. Means you can use debit ROU debit to amortization. I am writing in a single column just to save some space for me. Okay, so you'll amortize the ROU asset over a period of 5 years. The right of use asset will become 0. Now I have a question for you. If useful life is 3 years, lease term is 5 years, should I amortize the right of use asset over 3 years or over 5 years? So I have taken an asset for 5-year term, but I am estimating that my life will be only 3 years. So then why will we take it for 5 years? Maybe the lessor doesn't agree. The lessor says you have to take it for 5 years. So we have taken it for 5 years. Now, the useful life for me is only 3 years. The question here is, should we amortize it over a 3-year period or a 5-year period? That is the question. Will amortize over the useful life. Now, one thing that you can remember and understand is that the amortization cannot exceed the useful life. But sometimes what happens is, let us say, lease term is 5 years, useful life is 7 years. We normally will amortize it over 5-year period. But if after 5 years I am buying the same asset, then I will amortize it over 7-year period. So if purchased, I will use 7 years. The logic is I will amortize the right of use asset over the period I am using the particular asset. So if I am using it for 7 years, when I am purchasing it, let's say as per the contract, the car gets transferred to the lessee after 5 years, then you will amortize it over a period of 7 years. That is the useful life for the right of use asset. Sir, but if the useful life is lesser than the lease term, you will use the useful life only. Sir, if the useful life is greater than the lease term and the asset is transferred, you will use the useful life. Useful life is greater but the asset is not transferred, then you will use the lease term only, right? So that is how we will amortize the asset subsequently. So to summarize, If we are following the cost model, depreciation, if asset is transferred, always considered useful life. In other cases, lower of lease term and useful life. If it is remeasurement, if there is a remeasurement happening, which you'll understand subsequently, we'll see how to do that. And if it is using revaluation model, we'll follow the guidance given in Ind AS 16. So that is what we will do when it comes to useful life and amortization. Lease liability we have already discussed as to how we will account for it. Now here, this is a slightly tricky point in which the standard has mentioned. Interest should be the amount that produces a constant periodic rate of return. Generally, we will use the interest implicit in the lease or the incremental borrowing rate. Now, amount that will debit to P&L, interest expense that will debit. If it meets the capitalization requirement as per borrowing cost, then we'll capitalize it. Then variable lease payment. Variable lease payment is any payment that is not included in the lease payment, which is variable, that also will be taken to P&L, right? Sometimes, you may get a question where both of these are mixed and asked in the examination. Now, so far we have covered broadly how the thing like calculation of lease liability, the residual value guarantee, then how do we calculate lease payment, the ROU asset, all of that we have covered, and these are more simple parts or simple types of question which are asked in the examination. But then a lot of cases it will not be a direct question of lease asset, ROU asset and lease liability. We will need to consider few aspects where we say we need to remeasure the lease liability. So first time we are doing the measurement, we are now saying subsequently we are doing a remeasurement of lease liability. Now this is one very important aspect of, you can just keep this chart handy or remember what is given in this chart, so that if at all there is a question on remeasurement, we'll do one question on remeasurement, you will be able to handle the question in the examination. Okay, so now when we say remeasurement, we are adjusting the right of use asset and the corresponding lease liability, right? Now remeasure means subsequently we are remeasuring the ROU asset and the lease liability. Now what could be the case, or what could happen, or when could we start remeasuring the ROU asset and lease liability, right? So let me give some example. Say for example, initially we thought option to extend lease, this will not be exercised, meaning to say we thought there is no certainty, there is no reasonable certainty that we will exercise the option to extend the lease. Okay. But subsequently we exercise the option to extend the lease. Initially when we did the lease accounting, what did we say? We will not exercise. If we will not exercise, we will not include that in the lease term. We will not include that to calculate lease liability. But subsequently what are we saying? We will extend, or we have exercised the option subsequently. So if these kind of situation happens, we need to remeasure the lease liability. Now what are those situations? I'll just summarize it here. Again, this is not an in-depth discussion of these aspects because we are doing a fast track, right? So we should be able to understand the scenarios and we should be able to solve the questions, right? So first one, if there is a reassessment of the lease term. So for whatever reasons we are reassessing the lease term, or there is a reassessment of purchase option, meaning to say sometimes what happens is there is a purchase option given in the lease contract. That is, after the lease term ends, the lessee can purchase the leased asset. That is called purchase option. Initially we would have thought we will not exercise the purchase option. Now we are thinking we will exercise the purchase option. Or initially we have thought we will not extend. Now we are saying we will extend. Or initially we would have thought we will not terminate. Now we have actually terminated, or we think we will be terminating. If this happens, like reassessment of lease term or reassessment of purchase option, if that happens, then we will use the revised discount rate and recalculate the right of use asset and lease liability. We will recalculate the right of use asset and lease liability. So basically what we'll do is, I'll just show it here. We will take remaining lease payment. Remaining lease payment we will discount using the rate, and we will adjust the ROU asset and lease liability by that. Now you might be wondering, sir, why will the lease liability change? See, we'll take question on this, don't worry about that. The lease liability will change, because let us say, I'm saying we will now exercise, or we have exercised the option to extend. Now if we have exercised the option to extend, then what does that mean? The lease term gets extended. If the lease term gets extended, what does this mean? It means that we have, the term gets extended, the present value of lease liability or the present value of lease payment will also change. So the lease liability will also undergo a change. So what the standard is saying is, if this scenario exists, use the revised discount rate. Let me note it here. Revised discount rate and adjust the lease liability, and corresponding adjustment should happen to right of use asset only. Okay. So again, once again, if there is a reassessment of lease term or reassessment of purchased option, you will use the revised discount rate and you will remeasure the lease liability and the right of use asset. So now we'll take this particular question, which is quite comprehensive, and we'll understand how it is done. Okay. Remeasurement of a lease, and also there is a variable payment. So both of things are there. Entity W, or first let me complete this also. Here we use revised discount rate in these two cases where the lease term is reassessed and purchase option is reassessed. In other cases, if there is a change in residual value guarantee, let us say the estimate changes subsequently, or earlier it was a variable payment, now it has become a fixed payment, or if there is an index or rate, because of that if it changes, then we will use the original discount rate. Okay. So in two cases, reassessment of lease term and reassessment of purchase option, you will use the revised discount rate. If it is index or rate based, then in that case we'll use the original discount rate. If variable becomes fixed, original discount rate, change in residual value guarantees, original discount rate. Right. Now let's have a look at this question. Entity W entered into a contract for lease of retail store with entity J. So entity W has entered into a contract of lease for retail store with entity J on 1st of January of year 1. So one thing what I don't like about our material is, all of these questions are taken based on IFRS and IAS. So it's IFRS 16, the corresponding standard, and they keep using this 1st of January because internationally the financial year is 1st of January to 31st of December. In fact, even writing 100,000 and all of that, millions and all of that doesn't go well with what we do in the accounting system in our country, right? So it would be happier if it is April to March. That would be, in a lot of cases they also use millions and all. Using millions with rupees very less used, if you ask me. Anyways, the annual payment for initial term and renewal term is 100,000 and 110,000 respectively. The annual lease payment will increase based on annual increase in the CPI. So it is based on CPI at the end of the preceding year. For example, the payment due on 1st of January year 2 will be based on CPI available on 31st of December. That is given in the question. Entity W's incremental borrowing rate at the lease inception date and as on 1st of January of year 4 is 5% and 6%. Now, this is the incremental borrowing rate. And the CPI at the lease commencement date as on 1st of January is 120 and 125 respectively. So on lease commencement date and 1st of January. So lease commencement date is 1st of January of year 1. Okay. Then after 3 years, after 4 years, the CPI has become 125. At the lease commencement date, entity W did not have significant economic incentive to exercise the renewal option. Now, here is where we want to understand, or initial lease term is 5 years, renewal option is 3 years. The question says, entity does not or will not exercise the lease option or extension of lease option. Now, in this case, tell me one thing, what will be the lease term? Shall I say 5 years or 8 years? There is a renewal option, okay, and that option is not likely to be exercised. So yesterday we have understood how to calculate lease term. Now tell me in this case whether it is 5 years or 8 years. Yes, Chaitanya, the effect is prospective. Okay, Archana 5 years, Sandesh 5 years. See, I want you guys to comment back whenever I ask a question, even if it comes after a delay, because only when you interact, something will register in our mind. Yeah, that is the spirit. Okay, it is. I know it's a one-way communication. Sometimes, sometime in the future, a couple of sessions we'll have over Zoom also. You have to, so that I also know yes, you are attentively listening, and it is actually you're getting what we are saying, discussing, right? So here initial we are saying lease term is 5 years. So whatever we calculate, right? So whenever we calculate the present value, we will consider the right of use asset considering, I'll just show you, yeah. So ROU asset, the way we calculate will be for 5 years period. Sir, why 5 years period? Because initial lease term is estimated to be 5 years, and we will consider this 5-year term or the 5-year period for calculation of lease liability, right? So let us just do it is given in the material, but still I would want to do one question so that this comprehensively covers ROU asset, lease liability and the relevant aspect. So let me just share my Excel sheet. Yeah. Okay. So what I'll do is I'll paste the question here itself, so that if at all I have to refer to the question, it becomes, or if you have to refer to the question, it becomes easier. And if you have study material handy, please you can keep it. The same question is also available in the notes. You can refer to it subsequently also, not a problem. Okay. So this is the question. Now first is 5 years and the incremental borrowing rate. Now because implicit rate is not given, we will use the incremental borrowing rate on 1st of January of year 4. No, sorry. At the lease inception is 5% and 1st of January is 6%. So on lease inception it is 5. It's not visible, sorry. It's visible now. Okay, so the incremental rate is 5% and 6%. So first time when we do the accounting, we will take 5%. Okay, so how do we calculate lease liability? See, the lease payments that is given in the question is how much? 100,000. Now 100,000, it will not change. 100,000 will remain 100,000 because the CPI is available on 1st of January of year 4, which is 125. Okay, so beginning on 1st of January, that is lease inception, it is 100 only. So the lease payment or the lease liability that we calculate will be considering 100,000 only. Now, how do we calculate lease liability at the commencement date? Lease liability we know is the present value. It is the present value Just give me a moment. I think I'll do some adjustment and get the Excel thing. This will be better. If any of you are finding difficulty in reading the numbers, please let me know so that I can adjust the screen size accordingly. Okay, this is based on my screen. I am able to see it. If at all you feel that no, sir, we are not able to see it clearly, please feel free to ask me so that I'll adjust it accordingly. Okay, yeah. So now, whenever you have to calculate the lease liability is what? It is the present value of lease payment. Okay. Now, present value of lease payment here, lease payment is 100,000, 1 lakh, that is, right? 1 lakh, discount rate is 5%, term is also 5%, right? Now, the present value of 1 lakh, term is 5 years. What's wrong with me? The present value of 1 lakh discounted at 5% for a period of 5 years is how much? Okay. Now, in the examination, especially for this kind of question, though the material has given a detailed year by year calculation, you don't need to do because it is 1 lakh and it is 5% for 5 years. Now, what all of you can do is take your calculator. In your calculator, or most of you would be already doing this, 1 divided by 1.05, 1 divided by 1.05, 1 time, 2 times, 3 times, 4 times, 5 times, because we are 5 years. So 1 divided by 1.05, if you do 5 times equal to, and then do a grand total, you will get the present value factor, right? So the present value factor for 5% for 5 years for 1 rupee is 4.33. 4.32948. So I'll take, or 4.32925. 4.32925. Sir, we don't get Excel in the examination. How will we calculate? I know you don't get Excel in the examination. That's why I'm saying do simple. 1 divided by 1.05. Then 1.05. Like this if you do for 5 years and do a total, grand total. It is 4.3294, 4.3294. I've taken 9394, whatever is the number. Okay. So present value is 100,000, 1 lakh into this number, we get 432,930. This 4. Okay, I think yeah. So thanks for pointing out. I think, see, in a hurry, I didn't read the question properly. Don't do this in your examination. Okay, so thanks Archana for highlighting that. Good attention. Here, the annual payments for the initial term and so on are 100 and 110,000. And the annual lease payment will increase on so and so basis. The annual payment for initial and annual. So okay, here the payment due on 1st of January of year 2. Now, when we say the payment is due on 1st of January of year 2, what it means? We are paying at the beginning of the period. We are paying at the beginning of the period, and this was one mistake which I did, which you should not be doing, because I read the question in a hurry. Though I have solved it in the class already, but still, in a flow, I missed that thing, that payment due on 1st of January of year 2. So accordingly, my calculation will change here. Present value of 5% for 5 years, payment of -1, and payment is at the beginning of the year. So in that case, it becomes 4.5460. 4.5460, that will be the number. Now, how do we calculate on Excel in a calculator? Whenever you have payment at the beginning of the year, that is, this is paid at 0, 1, 2, 3, 4. 0 means beginning of the year or beginning of the lease term. 1 means end of the first year or beginning of the second year. So this is today, end of year 1 or beginning of year 2. End of year 2 or beginning of year 3. Like this you have to know. So whenever we have this, payment that you make today has a present value of 1. Okay, payment that you make today has present value of 1. So keep that 1 aside. Whenever there are payments in advance, keep that 1 aside, and for 4 years calculate 1 divided by 1.05 4 times. So 1 time, 2 times, 3 times, 4 times. And if you total all of this and add 1 to that, you get 4.5459. That is what we have got, 4.5460 here. So 4.5460. If you multiply, you get 454,600. This 454,600 is the lease liability. 454,600 is the lease liability. Now, I hope this calculation of lease liability is clear. If anyone has any question, feel free to ask in the chat box. Otherwise, I'll continue. Okay. So, yeah. Okay. 454,600 is the lease liability. Then, sir, in the examination, can we do year by year? Yes, you can absolutely do. You can take 100,000 here, 2, 3, 4, 5, and then you can do 100,000 into 1. Like this you can do, and then calculate the total. You'll get the same answer. And for calculation of present value of lease liability, especially when there is annuity payment, you don't need to work it out in detail. You can directly do a annuity factor calculation and you can get the number. Now we have got the lease liability, and for the lease liability, let us now prepare the table. Year, opening balance, payment, interest, closing balance. This is the standard format which I had told you in yesterday's class. Now here, whenever payments are made in advance, you have to do a slight variation. Okay, you have to do a slight variation in this table because payment is being made in advance. So in yesterday's class we said opening balance, interest, payment, closing balance. Now whenever we have payments in advance, what we need to do is we have to take opening balance, payment, balance for interest, and closing balance. Okay, so year 1, 2, 3, 4, 5, beginning balance is 454,600. Beginning balance is 454,600. First day itself I have paid 1 lakh. So 1 lakh as the payment. Now interest will be charged on 454 minus 1 lakh, which is 354. Interest at 5%, which is 17730. Closing balance is 354 plus 17730, 372,330. Okay, that is the closing balance of lease liability. Then second year, opening balance, payment, balance for interest, interest. Balance for interest is opening balance minus 1 lakh what I have paid at the beginning of the year. Balance for interest means on the amount on which I will be calculating the interest. Then interest at 5%, the closing balance 285,946. Then like this you calculate for 5 years. You will see that at the end of the period the closing balance is 0. So here what you can do, in the 4th year you can put the interest as minus 6.02, so that the closing balance becomes 0. But this is the first calculation. First time when you prepare the lease liability schedule, this is how it would look like. Then how will the ROU asset look like? ROU asset will be 1, 2, 3, 4, 5 years. Okay. The ROU asset opening balance is 454,600. Here we do not have any other payment that is being made. Then 454,600 depreciation or amortization. 454 divided by 5, 90,920 closing balance. 450 minus 90,920, then 272. So like this you keep on doing. At the end of 5th year, this will also become 0. Okay, this is the first time when you prepare the schedule or the table. Now, if we come back to the question, what it says is, at the lease commencement, entity W did not have a significant economic incentive to exercise the renewal option. So we said, okay, renewal will not be exercised. We'll calculate for 5-year period only. In the first quarter, entity W installed first quarter of year 4, means year 1 is completed, year 2 is completed, year 3 is completed. In the first quarter of year 4, entity W installed a unique lease improvement into the retail store with an estimated 5-year economic life. Entity W determined that it would only recover the cost if it exercises the renewal option, creating a significant economic incentive to extend. Now here what is happening is, I had a place, I thought I will use it only for 5 years, I will not renew it for further period of 3 years. But in the first quarter of year 4, means after 3 years are completed, entity W thinks that it has to extend the lease, only then it will get the benefits. So what we will do, in first quarter of year 4, because exact dates are not given, we can assume 1st of January of year 4. On 1st of January of year 4, now the entity will say, okay, I will exercise the renewal option. I will exercise the renewal option. Initially, did we have the renewal option? We did not have the renewal option. Now we are saying we will exercise the renewal option. Are we clear with this? We will exercise the renewal option. 1st of January of year 4, the renewal option is being exercised. Can you please confirm whether you have understood or not? Yes or no? Or any doubt? Okay, Akshay says yes. Sanjay says yes. Okay, great. Now we have decided we'll extend. Now what will happen? Let us, it's a very good question, and you should mark it as important, because this covers not only your measurement of ROE asset lease liability, it also covers variable, and it also covers your remeasurement aspect. Okay. Now on 1st of January of year 4, we have said we will extend. Okay. Now when we will extend here on 1st of January of year 4, the CPI has become 125. The CPI has become 125. Now listen to this very carefully. We have completed 3 years. We have completed 3 years. We are in the 4th year. So now we will say year 4, 5, 6, 7, 8. Sir, why 8? 5 original period, 3 years to extend. Now what are my lease payment? Now here is where a lot of students should get a doubt as to what are the lease payment, how should we calculate these lease payment. Now what the question says is, see, on on 1st of January of year 4, the CPI is now 125. What was the CPI earlier? The CPI earlier was 120. which means based on the CPI, the lease payment will increase. What does it say? Payment will increase based on the annual increase in the CPI at the end of the preceding year. Now, one thing that you need to understand, difference between CPI and LIBOR is, CPI is dependent on price rises. The index may not be consistent. Okay. Whereas interest rate, LIBOR, what we talk about, it is more consistent. 5%, 5%, 5%. You can predict that yes, it will be 5%. That is why in the LIBOR related example, we added the increment on year to year basis. But for inflation, today it may be 5%, next year it may be 3%, 2%, negative interest, negative inflation, maybe 10%. So that annual increment we do not do on a yearly basis. Now this aspect is not covered in detail in the study material, but when I have read the expert guidance on IFRS, and also commentary on US GAAP related leases. Okay, so it's very clear that LIBOR is something which is predictable, right? LIBOR now is no longer relevant, to be frank. It is more relatable, and you can predict it, so you will increase on a year to year basis. That is what we had seen in one of the earlier problems. CPI on the other hand is dependent on prices, keeps on fluctuating, so only the CPI available can be used to forecast or to tell the increase in lease payment. Now what has happened here is, original lease payment is 100,000 for year 1, 100,000 of year 1, what we have initially estimated, and then 110,000 for year 6, 7 and 8. Now CPI has become 125. Earlier it was 120, so it has become 125 out of 120. So if something was 120 earlier, now it is 125. So here revised payment will be 100 divided by 120 multiplied by 125 in next number concept. Okay, so whatever was 120 has become 125, whatever is 100,000 has become 104,167. Here also 104,167. Whatever is 110,000 will now become 114,583, 114,583, 114,583. I know this topic or this LIBOR and variable interest rate sometimes can become very, very tricky. So if it is LIBOR, the thing that you have to remember is you will apply it to all the lease periods. Whereas it is CPI or something, you will apply it only based on the CPI rate that is available. So this is the revised lease payment. Now, coming back to the question once again. Here, the option to extend the lease term has changed. Now, when the option to extend the lease term has changed, we will use the revised discount rate. So, this falls under the first category. We will use revised rate. So, what is the revised rate? 6%. So, using the revised rate, you will calculate the lease liability again. For the first period, year 4, we are paying today itself. You will take it 1 divided by 1.06, then this divided by 1.06, 1.06, 1.06. When you calculate, you can use your calculator also, you get the present value. So present value is 104 multiplied by 1. You keep on multiplying the numbers, and the total that you get is your lease liability 491,382. Okay, 491,382, that is the lease liability. Are we clear? Any question so far? Now we use the revised discount rate because we know that the option to exercise or option to extend will be exercised, and hence we are using the revised discount rate. Clear, 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 clear. Everybody clear? Very good. Very nice. Okay. Now, once this is done, what should we do? We have done the remeasurement. Once the remeasurement is done, you have to compare this with the original lease liability. Now, original lease liability, if you see, is 195. This number 195 here. This 195, what you have to do is you need to check this 195 and compare that with 491,382. 195 and 495,382. Okay, 195 is what? 195 is my 195 is my closing balance at the end of year 3 or opening balance at the end of year 4. On that date, I am remeasuring the lease liability and now I have got the amount of 491,382. So what you have to do is you have to increase the lease liability. So increase in lease liability is 491,382 one side. So this is revised liability. This is original liability. Original liability is 195,243. So increase in lease liability is 491 minus 195, which is 296,139. So what is this? This is nothing but the increase in the lease liability. So increase in the lease liability, you will credit to lease liability. How much? 296,139. If you have increased the lease liability, correspondingly you will increase the ROU asset by 296,139. Okay, this is how you will increase the liability. Then what will happen is I'll just update this table and show you. This is the original thing we did, right? Now I'll just update this table and show it to you. How does it change? This is the original table, right? Now 454 595 is the original thing, or 454 600. I think that is what we have taken. Yeah, so I think 454 600 is more appropriate. So 454 600 is what we have taken, and here we said our interest is higher, so I will say minus 6.32. This is how it was worked out. Now in year 4 where liability has changed to what? Year 4 liability has changed to 491,382. So we'll take 491,382 and the interest rate we will update to 6%. And like this you will calculate for year 5, 6, 7, 8 also. When you do the calculation, no, so the payment also has changed. I wrote 100,000. Payment also has changed. So payment has to be 104, then 104, then 114, 114, 114. Where did I miss it? Percent. No, so here the formula is not updated. The challenges of using Excel. Okay, if it is manually done, you will get to know correctly, right? So the revised table would look something like this. You're not required to prepare this for the examination, but just for an understanding that yes, from this particular period here in year 4, the numbers have changed to 491, and now you have all these payments, revised interest rate at 6%, and this becomes your closing balance, right? So that is how you will recalculate the ROU asset and you will recalculate the lease liability. So first you will recalculate the lease liability, you will increase the lease liability, and by the same amount you will also increase the right of use asset. So now with this we cover one very important aspect in lease accounting, which is your remeasurement aspect. So whenever we remeasure, you will adjust the ROU asset and lease liability, and you will, depending on what are the criteria, if it is reassessment of lease term or reassessment of purchase option. So basically think of it, when you reassess the lease term you will use the asset for a longer period. When it is a reassessment of purchase option, there also you will use the asset for a longer period. You will use the revised discount rate and increase the lease liability and right of use asset. In other cases, when there is a change in our residual value guarantee or variable earlier variable now being fixed, or index or rate changes, in that case you will use the original discount rate. Here in this particular question, we have used the revised discount rate because the lease term was reassessed. Because the lease term was reassessed, we have used the revised discount rate. Okay, so that covers or that concludes the lease liability part. Now if you see the material, they have done a pretty detailed job here. So what I was referring to is this part. This you can finish it in 2 lines itself. Okay, no need to do a detailed calculation. And we have done calculations for 5 years. In exams you can only do till 3 years because that is what is relevant. So in examination, don't do more than what is required. You will not get extra marks. Okay, you need to calculate lease liability at the end of particular year. You will use that. You can mark this question as important. Can be confusing at times in the examination. So we have understood the remeasurement of lease liability is adjusted to right of use asset. So there is no impact in P&L. There is no impact in P&L. And if ROU asset has a nil carrying amount, means ROU asset doesn't have any carrying amount, and there is a reduction in liability, then the balance part is recognized in P&L, because we cannot take ROU asset to less than 0. Any questions so far? For a couple of minutes if you have, or if you want me to solve any specific questions, if you have anything in mind, please let me know. Otherwise, we'll continue with the next aspect. Okay, ROE asset calculation, that also I'll include that. Now, here if you see, ROU asset at the end of year 3 is 181,840. So what you will do is, revised ROU asset is 181,840 plus 181,840 plus 296,139, 477,979, beginning of the 4th year. So 4th year, 5th year, 6th year, 7th year, 8th year. 5 years depreciation, this divided by 5. Every year amortization now will be 95,595. 95,595. Clear? Now, if the payments are dependent on index or rate, except variable interest rate is like a floating rate. Okay, except that if they are dependent on index or rate, even when you update that subsequently, you will use the original discount rate only. You will not use the revised discount rate, right? So that is broadly what is the remeasurement part. I have tried to summarize in the limited discussion we had. Now the next important and challenging part for a lot of students is lease modifications. Now, what are lease modifications and how do we account for lease modifications? Now, when we say lease modification, let me give you some examples first. Whenever I say lease modification, say for example, I have taken one floor on a building. My business improved, my business increased, and then because of which I wanted to take an additional floor on the building. Now, when I'm taking an additional floor, there are two options. I enter into a separate lease contract, then there is no lease modification. I go to the owner and say, boss, I have been using your premise for so long, so let us modify the original contract and let us add this additional floor space. So this is something called lease modification. Now lease modification can happen in two ways. One, you are changing the scope. Changing the scope means earlier I had 1000 SFT, now I have taken 1500 SFT. Changing the scope. The subject matter of the lease, the quantity of asset, if I have to put it that way, that itself is changing. That is one way where there is a lease modification. Now, don't be under this notion that lease modification always means increase. No, it doesn't mean. It can be reduction also. So, it can be change in scope of lease, or it can be change in the consideration of lease. So, originally we have agreed on some amount, let us say 10,000, 15,000, 20,000. Subsequently, we have changed. That amount. So, either there is a change in the scope or change in the consideration. Both of these are considered to be lease modification, right? So when we say there is a lease modification, there can be, addition of space, you give the space of, or sometimes there can be extension of lease. So that is also a lease modification. But it should not be there in the original contract. Please remember, just now we have done one question where the option to extend was given in the original contract itself. Now if the option to extend is given in the original contract, then there is no problem. But if the option to extend is not given in the original contract and subsequently you have decided to modify the contract and increase the lease period, that is also a lease modification. The time of lease payment, that can also change. Earlier I was paying at beginning of the year, now I am paying at end of the year, that is also lease modification. Most likely, the type of questions which are tested in the exams are you get additional space or you're surrendering a part of space. That is what is called lease modification. Now, coming to the accounting part of lease modification, you understand this chart, you are through. You have to understand this chart, you are through. How do we account for lease modification? First check that you have to do, and listen to this very, very carefully. First check you have to do whether there is an increase in scope. Increase in scope means there is a new right of use asset. Floor area increased. One more asset is under the lease. Earlier, I had taken one floor, now I have taken two floors. That is called increase in scope or additional right of use asset. If there is an increase in scope, then check whether the additional right is coming with a price which is same as compared to increase in scope. Now, what do I mean by that? Basically, let us say one floor currently I have taken 10,000 rupees. Okay, I added second floor he gave at 20,000, means 10,000 plus 10,000, 20,000. Now the price of the additional scope is commensurate. Commensurate means it is relatable, it is in line with increase in scope. Means whatever is the increase in scope, the price that I am paying is the price for the increased scope independently. So earlier I was paying 10,000, for one more floor I am paying 10,000. That is called the price which is commensurate with the increase in scope. Sometimes the owner may say, for two floors whoever takes I give 5% discount. So that is also a price which is commensurate with the scope. So if I get some discount which is generally prevailing in the market for taking a larger area, that also is called price is commensurate with the increase in scope. Now, first you have to check whether there is an increase in scope. If the answer is yes, so which also means that if it is a reduction in scope, this accounting will not apply. We will use the accounting here. If there is an increase in scope and price is commensurate, then it is a separate lease. No problem at all. It is a separate lease. Then, if there is an increase in scope, but price is not commensurate. Price is not commensurate meaning instead of 10,000 they are saying only 5,000, and in the market you will not get it at 5,000. So price is not commensurate with the scope. If price is not commensurate or if price is not in line with increase in scope, then you will apply the remeasurement of lease liability, what we have just now understood. So the first part we already know how to do. If there is an increase in scope and price is commensurate, you will account for it as a separate lease. If there is an increase in scope, price is not commensurate, you will remeasure the lease liability and you will adjust the ROU. There is no impact on the P&L. That is, but if there is a reduction in scope, lease term came down, asset we have surrendered. If there is a reduction in scope, then you will remeasure the lease liability using the revised discount rate. You will remeasure the lease liability using the revised discount rate. You will proportionately reduce the ROU asset and difference is charged to P&L. So these are the two things you need to understand. Increase in scope, yes. Price commensurate, yes. Separate lease. Increase in scope, yes. Price is not commensurate. Remeasurement of lease liability and ROU asset. No P&L impact, because in the earlier question also you see whatever amount was charged to lease liability, the same amount was adjusted to right of use asset itself. Then if there is a reduction in scope, use the revised discount rate to remeasure the lease liability. Reduce the ROU asset proportionately. How to do proportionately and all of that, we will take an example in tomorrow's session, and difference will be charged to P&L. So this is all for today, right? This is all for today. This chart try to revise, and if you have any questions, I'm there to answer your questions. Otherwise, we'll take up a problem on lease adjustment or lease modification tomorrow. So for your homework, you can do illustration number 31. Okay, illustration number 31. Now here, if you see in this particular question, the first advance is annual payment of 5 lakhs with an increase of 3% every year. So when it is defined that it is 3% increase every year, there is a liability to pay 3% increment every year, then you will use that 3% to calculate the lease liability. So each period you will increase that. Okay. So illustration number 31, you can do it on your own. If you have any doubt, you can let me know. We will solve it in tomorrow's class, or we will clarify your doubt in the tomorrow's session. Okay. Now here, this lease incentive is payable at the beginning of year 2, so that you will reduce it from the lease liability. Whatever is payable at the end of year 2, you will reduce it from the lease liability, and you will calculate the amounts accordingly. See, now for example, two situations. One, what we did just now, okay, where we have the rate also has changed, and there was also a change in the purchase option. So if the purchase option is there, then you will use the lease liability, the revised discount rate, and then you will calculate it accordingly. So here both had changed. The rate had also changed, and this had also changed. Class starts at 5:30. There's a WhatsApp group link. You can join there, where we'll be sending the updates whenever the class starts. You can download the notes that I'm referring to from our app. Price commensurate. Price commensurate means you have to check whether the increase in the scope, is matched with the price. For example, if I have one asset or one floor, price is 10,000. I am adding one more floor. Now when I am adding one more floor, if one floor is 10,000, second floor should be another 10,000 or maybe 9,500. But if the second floor is 5,000, then we say price is not commensurate. Okay, when we say price is not commensurate, means the extra item that I am getting or the extra asset that I am getting, that does not have a price which is similar or which is not matching with the extra asset. Okay, if you found this useful, do share it with your friends, the session. And any feedback on the speed, yesterday also I had checked. Yes, rent has to be paid in line with the market price or with the asset. That is what is the meaning of commensurate. Yesterday also I had asked, so yesterday the speed was fine. Today I hope the speed was good. If you want me to increase the speed, I can. Slightly I can reduce the speed also, but whenever you have a doubt, if you add it, if you ask it, that becomes easier for you. So thanks a lot for joining, guys. Those of you who have not joined the WhatsApp group can join the WhatsApp group and download the app notes from the app section. And tomorrow we'll continue with lease modification. Thanks a lot. Bye.